Good morning, everybody. It is the 9th day of February already, and wanted to take a few moments and go over some different things that are happening in the markets. You folks have been getting some emails and things from me about concerns that I have, but concerns that are long term. I just thought I'd talk a little bit today just about what's happening in the market. So far, it's kind of all good, so nothing to really cry about. All right, so what I have here, as we're looking at this chart, let me get rid of some of the busyness in here for you guys, is the bond aggregate, the bond market. What's happening in the bond market? So I'm looking back over the course of a year, and this is the ag. It used to be Lehman Brothers bond aggregate, but right now it's Barclays, and I'm using iShares so that I have something I can show you. And you can see that nothing really happening. I guess that's a good thing. So the bond market is just trailing along. We had this big decline in bond markets, but then the Federal Reserve came in and said, we're going to backstop bonds. And so what's happening here is bonds have stabilized. So this is pretty much the whole bond market. If you wanted to do treasuries, you can kind of see a little bit more decline. If you wanted to see high quality corporates, okay. And if you wanted to see high yield, a little better. So people are stretching a little bit for that yield. The quality of the bonds in this particular group, not as good, but that's so far the Fed's pretty much said they're going to take care of this part of our economic system. So, okay, that's what's happening. If you look at the stock market, so everybody wants to use the S&P 500, let's do it. And we look back for a 12-month period of time and say, all right, so right here was the 19th of February of last year. And then we pull a line across just so we can get a visual, and try to get it right. I won't get it right, but I can get it close. There it is. You can see that we went from February until about right here, and that was the 4th day of November before we had a sustained upward trend in the market. But people measure from January to December, so I'm not going to argue with you. I'm just saying that the stock market had that little dip in the middle of it that people seem so far to be disregarding. So ask yourself this question. Why would this market be up this high given this much of an economic problem? I mean, if you look back over the last 12 months, we had COVID. We had COVID. COVID was and is a very bad thing for us economically. So what happened is, as people went home and were receiving money that was generated from the government, this money has gone into savings. This money has gone into investments like the stock market. And so this extra capital is generating the upside of the market. When you look at various companies, it's really a tale of two cities. When you look at American Airlines, when you look at Exxon, when you look at a lot of these companies, they don't have positive earnings, okay? But the other side is when you look at some of the technology stocks, some of the healthcare stocks, they have pretty strong earnings. So what we're doing at this very moment, I'm using Zoom. So Zoom gets to make some money off of the revenues that we pay them, the premium that we pay them. So at the end of the day, it's not an equal playing field. The S&P 500 is really being bolstered by the FANG stocks, Facebook, Amazon, Apple, Netflix, Google times 2, and then you can probably add some more into that list, but those are the big ones. But just understand that that's not what the whole 500 stock list is doing. So be careful here. When you look overseas and say, okay, Europe, Australia, and the Far East, what we're seeing now is these people over there are starting to get a bid, if you will, and those markets are starting to move up. And they have not moved up or not, or are not as high as our markets are. If I took this out maybe for 5 years, you can see what I mean. This is Europe, Australia, and the Far East, and it has not really had sustained growth. So will we see sustained growth now in 2021? And the answer is I don't know, but I think so, because their stocks are not as expensive as ours. If we look at the emerging market space, the dominant player in this area, of course, is China. And we look at this area and say, okay, that is really starting to move up. But, drawing a line from right here, which again, there we are in November again before we saw any sort of gain, and then taking this back from 2018, you can see that we're just now starting to see some daylight in this particular part of the world economy. So not killing it here. And this is looking back for 5 years. We have short memories about what happens, but what happens is, money goes where it's treated the best. And we have had a long run with large U.S. growth style companies, but they're very expensive now. And you might want to look at some of the other parts of the world. I'm just kind of saying that. Outside of that, everybody's asking about gold. Yeah, gold's not going up right now. So should you have some gold in your portfolio? My argument is if it's going up, probably yes. Is it a hedge against inflation? Sort of. So is real estate. So are stocks. So as you're looking at a portfolio and saying, everybody that, every other commercial says buy gold because the world's coming to an end, I don't know. I mean, it doesn't say that this is really working that great when you look at this chart. So overall, what we're seeing is this. The stock market is going up. Why fight the trend? Being cautious because you're paying a premium for U.S. stocks? Absolutely. But longer term, when you listen to the projections from the big analysts like at Merrill Lynch, for example, they're calling for a 3,800 S&P 500 by year end. Well, we're at 3,911 now, so what you should extrapolate is probably, right here is the end of that run, somewhere around here. So are we at the top on the S&P? According to Merrill Lynch, we are, but we'll have to see longer term if that's correct or not. Just be cautious with this because stocks, especially here in the United States, are not cheap, and we're not in a healthy economy. So just laying it out there for you. Don't want to put any scare tactics out there, just saying, be conscious that, nothing goes up forever, and eventually, gravity happens. And I just want you to understand that, we're at the top of the stock markets. So if you go back and listen to Warren Buffett, you buy when things are down and you sell when things are up. One of his famous quotes that I really like is, you never know who's swimming naked until the tide goes out. So be careful here that we're not overpaying for equities at this point. And with that, I'll bid you a good February, and be safe and be healthy. And we'll talk to you next month.